Good afternoon, everyone. Jason here. Today is October 4th, and this is your aftermarket update. All right, so we had a good day here at the Oil Trading Group. It's been a few days since we have made one of these videos, and we've been working on this really cool new partnership that we're going to be rolling out. All of the details this weekend, and so I have been very busy keeping up with that. I did put out a post here that kind of recapped the month of September. If you haven't looked at that, I would encourage you to go to the website, take a look at our recap for the month of September. That will give you a really good idea of how we did. And this week, the first week of October, has been a really strong week. We've had three solid winning days. I'm making you a video here today because I do want you to see that we did have a 110 tick trade of the day. I like to show you these versus talking about them. A lot of vendors will just tell you that they had these really good trades, mark up a few charts, and you really never know if they were actually in that trade or not. I like to show you these videos because we do get into these trades and then we manage them through the rest of the day. The day didn't start out terribly easy for us. We had a trade. It was crude oil inventory report Wednesday. We had a trade in an area that we ultimately got short from that worked out. It went down about 25 ticks. It missed us by 3 ticks. Then I get in. We have another little trade that we get into, and I make 5 ticks on it as it goes down fairly deep, and it comes back and retraces me out at plus 5 ticks, and I took a losing trade. And then we ended up with this 110 tick trade of the day. So despite the fact that it is 110 ticks, I ended up at 81 plus ticks on the day. So I want you to know that there was a few trades in the middle of that. We did have a losing trade. We'll talk about that here in just a few minutes. But one of the things that I want to draw your attention to is, despite the fact that you had this really long move here today, in fact, this move that we actually ended up capturing was the entire range. So if you measure from here to here, right, and you pull this back here, that's 91 ticks. If you look in the bottom left-hand corner of the screen, you will also see the average daily range there was 91 ticks. That's a very narrow range. We had a good day yesterday. It wasn't a terribly dramatic day, but in terms of win, but it was a win. If you look at yesterday's total range, it was 51 ticks, and if you go back into Monday, there was a fairly large range on that day at 164 ticks. But again, the ranges up until really, with the exception of Monday, the ranges have been fairly narrow. And in fact, again, I detail that out in the September recap, just how things have changed over the course of the last 3 years, since really 4 years since 2014, where the range was 5,800 ticks that year, where it's about 1,288 ticks this year. So the ranges have been getting smaller and smaller. And as we all know, as traders, we like range expansion. We like it when the ranges are getting bigger and bigger. That means the market's moving and we have more opportunity to get bigger trades. But we've been able to successfully navigate it here this year. And so far, so good for the month of October as we're 3 days in. Let's talk about the trades that we have today here. First thing I want to do is I want to talk to you about a couple of ideas. I'm going to turn on these time slots here. One of the things that we talk about here in great detail is that the higher low for the day gets made on a Monday or Tuesday. We had a really nice high in place this week. In fact, if you come back here and take a look at this chart, you'll see this is Wednesday, Tuesday, Monday. This is the high here for the week. So we know that the higher low for the week gets made on Monday or Tuesday. And we've made a newer low here on Wednesday, and we have a high up here on Monday. So we pretty much can rest assured that the high has been put in for the week. Now, it doesn't mean it can't retrace on Thursday and Friday, but under about 95 to 99% of the time. There's a few exceptions. There was an OPEC meeting in a week. There was the election week. But for the most part, the high and low for the week get made on Monday or Tuesday. So we feel pretty comfortable that the high has been set for the week. We just have to watch out for those retracement points for the market to possibly rally back up and recoup some of the losses that have been going on this week. Today was crude oil inventory report Wednesday. One of the things that we also know is that there is what we call a 9 a.m. to 10 a.m. swing reversal zone. This occurred at about 9:15. It's hard to play any trades right up against that inventory number. So one of the things that we look for is this reversal pattern up here. We were looking for this reversal pattern here. I was trying to get short. We got up and hit this high, ended up getting stopped out up here on a trade. And these lines, 2 lines here, represent the sweet spot of our retracement zone. So if you look at this line here at 50, this is an area that we were looking to get short. Our first trade actually to get short, I got stopped out up here. I looked to get short again. The market comes down to 27, takes me out at +5, and then it kind of rotates around, and then I get in short again one more time after we had this breakup through. Now, what was interesting about this breakup through, and this red line represents a sweet spot retracement here. I'm going to take that out just for a minute so you can see this long wick up. So one of the things that we talk about is a secondary way to get in to your 9 a.m. to 10 a.m. swing zone, and this was really fairly aggressive push up that we could not really maintain. And so what we saw up here, and I'm not going to be able to recreate this for you, so you'll have to take my word for it. What we saw up here is there were 399 orders hit the offer up here, so right at 59, and they immediately started rejecting out. So once we got this here started to reject out, settlement today was at 42, which is a little bit lower down here. But once this thing started to reject out, this is where I'm looking to get short again. So my initial short today was here after taking a stop out up here. We took that short. It came down here, took me out at +5. Comes back up, a little frustrated with that. And then we look to get short again after this run up through down right here at 50. And then what we talked about is the fact that if we broke 39.38, which is about 20 ticks off of where these buyers were stuck, if you get down here to 39.38 right in this area, we talked about the fact that once that broke, you should really get this heavy unwind as the stops were being cleared out from those longs on the way on that rally back up. And so we really did catch a very nice move. If you think about the fact that the total range on the day was 91 ticks times 2, that would be 182. We caught 55 times 2 or 110 of those ticks divided by 182. We basically captured 60% of the entire range on the day in one trade. So it was a really handsome trade. So again, this sweet spot level here really played out for us. In addition to that, we have our market maker levels. We talk about one real key idea. They got to go in steps. If the market goes from this step, then you look for it to go to this step. If it can't get through this step, then you look for it to come back. We also talk about this particular routine that we deal with, which is called kick the signal and pay the target. And that's precisely what happened here today. We kicked this signal and paid this target, and then you look for it to pay the target underneath if all things are beginning to work out. Our target down below you here, that is 74. We were actually looking to get down into one of the market structure extension levels, which is just a little bit lower at 61. And I end up getting pulled back on a stop out up here at 96 on a trail stop. But by the time we got in up here at 51, down to this level here at 96, that was 55 ticks times 2 lots. Our initial stop on that was 61, so 10 ticks. We got a 55 tick trade out of that. So that was a 5.5 to 1 risk reward. And so we easily erased the ticks that we were down on the day. I believe when I got into that trade, I was down 29 ticks total. So what is that? 14.5 ticks per contract. So I was down $290 before this thing comes all the way down, and we go for an $1,100 trade on that move to the downside. So the trade lasts for about an hour and 15 minutes, roughly, give or take. I'm not going to show you that entire thing. Obviously, I'm going to cut the trade down. I'm going to show you the beginning, let you hear where we get in, where the stop is. My initial target was going to be in the 20s. It was going to be right here in this 20, this structure mid, kind of down here where we spiked down to in this area, somewhere between this 26 down to 20 was going to be our initial target. But what we talked about is if the market's really becoming aggressive, we would look for this thing to push down deeper. And of course, this one bar here on the 3-minute chart really shows just how aggressive that move was. So you're going to see me get into the trade. You're going to hear me talk about it. And then once we get through that, I'm going to cut that down. I'll take the rest of the trade, cut it down, put some music behind it. I'll show you where we get to break even, and then I'll show you where the trade goes off at the target. So I don't know, about 3-4 minutes on that video. What was an hour and 15 minutes? I'm going to crunch down into about 3 or 4 minutes. So again, without further ado, here is the OTG trade of the day. Short again. I got clipped out. I am short again one more time here. My stop is going to be 61. I'm in at 51. Stop 61. Okay. Stop 61. Target is into the 20s down below. All right, so you can see that the market comes down to that low and then begins to rally up here. If you look, we came down to a low, just a couple of ticks off of that structure target, rallies back up into the mid, and then begins the process of slowly walking back down. And then we'll see where this thing ends up as we make our way into the trading day for tomorrow. So as always, I want to say thank you for spending time watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.